Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we are going over one of the stocks in my portfolio. This is actually the newest stock in my portfolio, and if we go to my holdings here and we sort from my biggest gainers to my biggest losers, out of the 24 companies that I own, you see that we have Honeywell, Caterpillar, Cisco, and my number one investment, Broadcom, at the top. And at the very bottom of the list, we have two in the red, Kimberly-Clark, and then last but not least, we have the one that we are going over today. We are going over Lockheed Martin. I'm investing in this company, and I think that over the course of these next couple of months, maybe even the next year or so, this stock could probably lag in share price, and that is exactly what I want. I'm currently down 7% on this stock, and I hope I go down to minus 10%, minus 15%. Heck, even minus 20% would be awesome for me because I'm a long-term dividend investor, and I'm going to announce a piece of news here that is pretty awesome for this company and why I think it is great for someone like me that is a long-term shareholder that is looking for both capital appreciation as well as dividend passive income. So overall, guys, before we get into this video, before we start going over all this piece of news, as well as a little quick highlight for another one of my companies as well, I would invite you to subscribe if you haven't done so already. I track my annual and monthly dividend income through these charts right here that I update every single month, which I'll be updating in the next video or two. I also update my portfolio value and my monthly YouTube income through all these charts. So if you want to see those updated every single month, go ahead and subscribe to me. I'd invite you to do so. And here's the 24 companies that I own right here and what they pay me out on an annual and monthly basis. And then I also have this. I also have my brokerage that I showcase every single video. I love M1 Finance. I love the features that they have to offer, including sharing my pie. If you guys want to invest in the companies that I invest in directly, you can check this out down below in the description. And if you want to get signed up with M1 Finance, you can get $10 for signing up and depositing $100 to the platform. 62 people have signed up so far. Let's get that to 63. Let's get that to 64. I'm so excited for the days we can get this to 100. This is what makes me happy. Not only for the $10, but what really gets me excited is that I'm getting people invested into a brokerage that they've never been invested to before. That's really exciting, and it's a really big step for a lot of you guys that have never invested before, and I'm helping you guys create wealth. So that's really what makes me happy. So overall, guys, go ahead and check out all that stuff down below in the description. Here's the 24 companies that I own, and let's go ahead and dive into Lockheed Martin, the one that we are showcasing in this video. So Lockheed Martin, in case you didn't know, I recently made a video about it, about why I'm adding it to my portfolio. So go check that out if you haven't seen that. But Lockheed Martin makes the vast majority of products for the U.S. military, especially for the U.S. Air Force. The F-35 specifically being their number one profit puppy, okay? This is where a lot of their profits come from. And this company makes a wide array of products, from missiles to satellite systems to space exploration products to just basic military equipment to all different types of products. These are high barrier to entry products. They really only have a few competitors, like one of their main competitors, for example, is Boeing. I know that actually another one of my companies, a very small competitor, I wouldn't say they're a big threat or anything, but for example, another company that I own, Honeywell, makes a couple of competing products as well. Another big one is Raytheon Technologies. Raytheon is one of their biggest competitors. But other than those couple of names, really Raytheon and Boeing, really only being the only two, when we're talking about Lockheed Martin, they really don't have a lot of competitors in the space, and this is not an easy field to just get invested into. So I'm not really too much worried about competitors, and the pricing power that this company has is incredible. It's unparalleled compared to really any other business I own out there. The company makes profit on these products. The level of profitability is ridiculous, and that's why you see this dividend payment right here. 5 years ago, it paid out $1.65. The next year, it paid out $1.82. The next year, it paid out $2. The next year, it paid out $2.20. The next year, it paid out $2.40, and they just raised the dividend just a couple weeks ago up to $2.60. You're looking, just even right there, look at that, $2.60 to $2.40. That's nearly a double-digit raise in a recession. And one of the things that I showcased to you guys the other day, like I said in my previous video, is that I went all the way back. I found the historical data of this company. And did you know that when you look at this company and you figure out that if you go back to their balance sheet and their income statement in 2007, 2008, 2009, during the financial crisis, did you know that this company increased revenues, increased profits every single year, even during the Great Recession? And that just goes to show that no matter what happens with the U.S. economy, no matter what changes, what innovates, basically the way I look at it is no matter what, the United States military is always going to need funding. Now, it might increase, it might decrease over time. We could argue about that. There's no way of really knowing. But at the end of the day, the United States military, and specifically the U.S. Air Force, is always going to need products to fund its military, and these are the guys that make nearly all of those products for them. So basically, the way I look at Lockheed Martin, it's a stable business, an incredible dividend payer, an incredible dividend grower, and even as a share price gainer, I think that this company has a lot of opportunity for share price gains in the coming years. And right now, the way that it's trading, the PE ratio is about a 14. I'm going to repeat that again. The PE ratio is about a 14. And when you compare this to where the market is, this is nothing even close to what the market trades at today. I know right now, I believe the S&P, last time I checked, is trading something like, I think it's a 28. So you're literally looking at paying double in premium on a net income basis for a PE ratio for the S&P 500 versus paying for a Lockheed Martin, when the dividend is also nearly double that of the S&P as well. So when you're investing into Lockheed Martin, I think it's a great investment for someone that is like me, a dividend growth investor. And after all that said and done, let's look at a new deal that Lockheed Martin just made the other day. Lockheed Martin inks a $4.4 billion deal to acquire Aerojet Rocketdyne. Now let's go ahead and look up Aerojet stock. Aero, if I can spell it, Aerojet, there we go, AJRD. Now this company had a massive spike up yesterday, as we said, because they just announced the buyout, and they're looking to buy him out for, I believe it's $55 a share. And what's so great about this company is that I'll read on and then I'll show you guys some of the products and some of the movements that Aerojet was looking at making. Lockheed Martin Corp said on Sunday it has agreed to buy U.S. rocket engine manufacturer Aerojet Rocketdyne Holdings Incorporated for $4.4 billion, including debt and net cash. The deal is Lockheed's biggest acquisition since Jim Taiclet took over as chief executive in June. He is seeking to beef up the company's propulsion capabilities amid competition from new entrants such as SpaceX and Blue Origin for space contracts within the U.S. government. Acquiring Aerojet Rocketdyne will preserve and strengthen an essential component of the domestic defense industrial base and reduce costs for our customers and the American taxpayer. Now, what's so cool about this, I recently made a last video when I was talking about Jim Taiclet, their new CEO. I love this guy. I think that this guy is very competent. I think he's very intelligent. Jim Taiclet, I'm a fan, and this is just another move that I show that this guy knows what he's doing. He's looking at innovating. He's looking at going into spaces that are not only growth categories, but keeping a competitive advantage. Because when we're talking about the type of equipment that they sell, space products and space exploration, that's why you see companies like, for example, what's one of the biggest hype names, you see people talk about all the time? Space stock, Virgin Galactic. It's had a huge spike up since its IPO. I think that this stock is very speculative, and the way I look at it is that they might be able to capitalize. They might be able to take their clients to travel around the world. They might be able to do different specific contracts with NASA and stuff like that. And if that's the case, that's great for them. But this company loses millions and millions and millions of dollars every year. But why not invest in a company that is going to have just as good a competitive space products with tons of more capital and tons of more investments in it? And you can invest in Lockheed Martin that A, will pay you as you own it through the form of dividend payments, and B, already has, financially speaking, a lot stronger footholding, and also they have tons of contracts with the United States government, like I just mentioned, and this gives this company tons of financial power. This company is constantly looking at innovating, and when they have a new CEO, Jim Taiclet, the guy that I love, the guy that has an incredible track record that grew his previous company he was CEO at an incredible pace, I think that this guy is going to take this company to the next level. It's just moves like this $4.4 billion deal that is going to just beef up that balance sheet, beef up the income statement, beef up the cash flows for the long run for Lockheed Martin. And I'm going to scroll down here and read one more part, another quote. It says, as part of Lockheed Martin, we will bring our advanced technologies together with their substantial expertise and resources to accelerate our shared purpose, enabling the defense of our nation and space exploration. Now that brings me to the next point. I want to showcase Aerojet Rocketdyne for a minute, and I just want to give you an idea of the type of products that this company has to sell. Now, I went ahead and did some research behind the scenes of this company, and I saw that this company has been increasing revenues, increasing its net income pretty much every single year for years in and years out. Now, I looked at the projections, some of the analyst projections for next year, and they were looking at growing revenues next year. They're also looking at growing earnings per share next year. So what is very important to me, especially as a dividend investor, for a company that is going to be acquiring this company, that not only are they going to be investing in their new technologies, they'll be bringing on extra profitability. And to me as a dividend investor, I'm all about profitability. I would rather have a company that only grew revenues 2% a year, 3% a year, but continued to grow revenues and profits at a steady pace than a company that had 50% revenue growth and never made a dime, that they lost hundreds of millions of dollars. Space stock, like we just mentioned. But that said, this company is a very profitable company. They're growing revenues, and some of the technologies that they have, as you see it here, I'll scroll through these pictures. These pictures that I'm scrolling through here, these are some of the products that people really can't invest into. It's really hard to copycat these. And let's go ahead and look at their space sector, because that's the main reason that Aerojet is being bought out by Lockheed Martin. You see some of their products. They have Dream Chasers, they have Orion, they have their space launch system, they have their CST-100 Starliner. These are products that are not easy to make. So this is the type of technologies that Lockheed Martin is acquiring with this. And what's great about this is that Lockheed Martin already had deals for some of these products and some agreements through different contracts with Aerojet. So they were already having to have different agreements, where they were selling products to Aerojet, Aerojet was selling products to Lockheed Martin. Now they no longer have to do that. So like for example, if they want to buy some products or have a contract with Aerojet, they no longer have to buy that out and then they have to lose money where they have to pay a premium because Aerojet has the technologies for it. Well, now Lockheed Martin owns it. So they just own it themselves. They don't have to buy anything. They have the technologies, they have the capabilities, they have the thousands and thousands of patents that this company has. And once again, I just think this is a good move. And I want to show you a little bit further. I want to show this is the last year's annual report. And right here, I want to read this paragraph. 2019 was a very busy year for our space business as well. NASA has laid the groundwork to return Americans to the moon by 2024, and Aerojet Rocketdyne will be a critical contributor on multiple facets of this mission, called Artemis. We delivered the jettison motor for the Orion crew capsule's launch abort system, and we completed acceptance testing of all 16 RS-25 engines and flight controllers needed to power the 4 flights of NASA's SLS. The first set of engines for Artemis 1, the first flight of SLS, were also discovered and have been integrated to the SLS core stage. With the core stage complete, the SLS team will start preparing it for testing at NASA's Stennis Space Center in Mississippi. So they're looking at space exploration in 2024. And like I said, some of the competitors, some of the hype stocks that have had a lot of growth opportunities for them is space stock. People have been thinking that this is going to be the next Tesla. Who knows? I'm not going to comment on that. But this company, the big hype around it is that they're going to be able to take people out into space in the next couple of years. Maybe say, I don't know, 2024? Well, you have a company that is already getting deals with NASA to have some of these first missions. And guess what? Lockheed just bought it out. So if that is what it's going to be, everybody's getting really excited. Investors are getting a ton of hype around it. And if space exploration for just regular humans is going to be a thing, well, if that's true, well, guess what? Lockheed Martin just became a part of that by buying out Aerojet Rocketdyne. So that's really important, as they just mentioned in their previous annual report. And I wanted to show one final thing as well before we get off this annual report of Aerojet Rocketdyne. In the financial results and outlook section, I wanted to show their backlog, because one thing that's really interesting about Lockheed Martin is that they have billions and billions of dollars of backlog that the government is trying to buy from them. And we look at Aerojet Rocketdyne and we see the same thing. Aerojet Rocketdyne's financial performance was excellent in 2019. Sales of $2 billion were up 5% year over year. We saw strong growth in backlog as well and closed the year with a record $5.4 billion in total backlog, up 32% compared to December 2018. So not only is this company getting excellent types of products, excellent patents, excellent technologies, revenue growth, profitability, but they're also buying out $5.4 billion worth of backlogged orders. That is guaranteed revenue that is going to come in the next couple of years. That is already set in stone, already signed contracts, so they already have those deals already made, and Lockheed Martin doesn't have to work for that. And I just want to scroll through. Like I said, I like to show this because they have so many different products. I don't go over them by one, and there's no need because I don't even understand half of them. Because some of these products are so complicated that unless you're a military officer, you probably wouldn't even understand half of these. But look at these different products that Lockheed Martin has to offer. These products are not easy to copy. In the same way that I said that Aerojet Rocketdyne is very dominant in the space sector, well, guess what? When we're talking about military products, Lockheed Martin is the same way. So I'm going to scroll through here just so you can see all of what they have to offer. Yeah, feel free to pause the video anytime if you want to look at any of these. You see things like submarines, you see things like missiles, you see things like intelligence systems and space systems and all different types of products. And this is why I love Lockheed Martin for the long term, and I think it's going to be a great dividend investment. A lot of different products they have to offer there. And then last but not least, the last thing I want to show. So when I was talking about Jim Taslett, their CEO, and talking about constantly innovating their company, innovating their products, I want to show this little part on Lockheed Martin's annual report. We were looking at Aerojet Rocketdyne's annual report, but now we're looking at Lockheed Martin's. The relentless drive to innovate, that's key and bold right there. At Lockheed Martin, we know that our leadership is built on our ability to innovate. It has been our legacy, and we recognize that it is our future. In 2019, we continued to implement our vision for digital transformation. We invested in promising new technologies and sought to identify and partner with the companies and people shaping the future. We also invested across our company, making capital expenditures of $1.5 billion and $1.3 billion in our independent research and development. $1.5 billion in independent research and development. Like I said, pretty much R&D spending. This company is not only buying out other products, buying out other companies, they're spending $1.5 billion a year just to develop new products that people haven't thought of in the past. And when you're investing that much into new products, eventually you're going to come up with something. And if that's the case, that's just more opportunities. Like I said, I'm really big on R&D spending. And like I mentioned before, if you've seen some of my previous videos, the reason why my number one investment, the company that has done incredibly this year, like I said, I started buying this company at around $230, $240 a share, and now it's ridiculous, guys. Not only did they just raise that dividend 11%, but they have skyrocketed in price. And one of the main reasons why that is because this company has tens of thousands of patents and constantly innovates. They have billions of dollars of research and development spending. And do you see a pattern here? Do you see similarities? You have a company that is very dominant in its field, hard to replicate, tons of patents, and has billions of dollars of research and development. In the same way that Broadcom had this massive spike up and increases its dividend at an incredible pace, I think it's safe to say, in my bet, Lockheed Martin is going to eventually do the same thing, and they have an extremely low valuation, just like that of Broadcom. And even if I'm wrong, even if they never innovate, they never grow, and they just keep on doing what they're doing today, well, in the meantime, I'm still getting about a 3% dividend yield just to own it in the meantime. So I'm perfectly fine owning that. But thank you guys so much for watching all the way to the end. Like I said, I'd invite you to subscribe if you haven't done so already. And go ahead and check out all that stuff down below in the description. Like I said, like referrals, mentoring calls, Yada savings accounts, credit card referrals, and my pie if you want to invest in it yourself. But thank you guys so much for watching, and I'll catch you guys next time.